We have the chairperson of Piramal Pharma, Nandini Piramal, joining us to talk to us about the numbers. Welcome, first off. Give us a sense on what the outlook for the rest of FY26 looks like for the company.
First, I think the one thing I did want to talk about is we at Piramal Pharma did a deal last night where we bought a product called Kenalog from Bristol Myers Squibb. This product it's a corticosteroid that works for gouty arthritis and rheumatoid arthritis, and is a niche product with complex manufacturing requirements that makes it a perfect fit for our portfolio. Where we will pay $35 million for it, with additional $65 million possible in terms of if they meet operational and financial milestones. Again, this is part of our strategy in complex hospital generics to add niche products to it through acquisition and licensing and our own development. Talking about the year, I think we did mention earlier that it will be a muted year. I think we're going to stick to that guidance that we had said for FY26, though it will be a stretch.
Okay, and Ms. Piramal, since you've spoken about this Kenalog acquisition, talk to us about how material this can be and what is the expected timeline for additional market approvals back home?
It will take about 3 months, plus or minus, for the closing to happen. There are, some operational and milestones that need to happen before closing. But we expect it on an annualized basis to be about between $30 to $40 million in terms of sales. And it's in line with our target EBITDA for the complex hospital generics. So what we expect is that it will add incremental revenue without a lot of incremental cost, and that will help us improve our ROCEs as well as help us with margins.
RFP activity, that's picked up meaningfully since September, October. How are you seeing this, and how much of this is early stage versus late stage programs, and when should this translate to revenue?
So one of the things I want to say is that we've seen the US biopharma funding and M&A activity actually pick up since October. I think that is a good sign for the industry as a whole, because it shows that investors in the US have that kind of confidence. And once the biopharma companies actually get money, they're more willing to do both development as well as manufacturing projects. And what we have seen is that since October, we have seen early signs of a pickup in RFPs. However, for that to translate to orders will take time. So it could be 6 months. So that's why I'm saying it's early signs of recovery. But, we'll have to see how that translates into orders.
Nandini, talk to us about what is the outlook on your net debt at 4,200 crores. What's the priority order for cash flows? Is it going to be deleveraging versus capex versus acquisitions? How is the incoming cash and the current cash on books going to be used?
So we expect net debt to increase slightly by the end of the year. We want to continue our investments in capex as well as acquisitions where needed. For example, Kenalog is one example. But overall, I think we believe in the health of the business. We do see that we're getting a lot of interest in our North American sites, in our Riverview site for high potent API, as well as payload linker. And our Lexington site for sterile fill finish. We announced earlier $90 million expansion. The Riverview one was smaller, and that should come online this quarter. The Lexington one will come online end of calendar year 27. But, you have to continue to make the investment so that we can finish and get the revenue. But I think one of the things we are seeing is that there is a renewed push towards onshoring. in the US, and we're seeing, again, very good interest in our capabilities, and especially the differentiated capabilities overseas.
And this capex of, I mean, the understanding of the Lexington capex is around $90 million, right? What's the kind of ROC payback period? Could you give us some color around that? Also, steady state utilizations, what to expect?
We are expecting a ramp up in both of those sites. It's hard to give you, let's say, overall one project or one line, return asset turns. But I think once they get to scale, we're expecting a 2.5 times the asset turn.
Ms. Piramal, on that note, we'll let you go. Thank you so much for your time, and thanks so much for joining us. So viewers, that was the management